Robert Bonavito here, New Jersey forensic accountant. Today we're going to talk about employee theft. And the reason we're going to talk about that is because I had a phone call from someone I actually put in prison about 5 years ago based on our testimony. And the first thing they told me is, Mr. Bonavito, I wish to thank you for putting me in prison. It's the best thing that ever happened to me was getting caught. It's like, I thought it was a joke, but eventually I realized it was real. It was a controller slash bookkeeper named Dan, who we testified in court after doing a forensic audit of his company and found he was stealing millions of dollars. And he basically told me was, we had a little discussion about what happened and behind the scenes stuff, which I wasn't aware of. But he said he was, happy that, the testimony went well and he was in jail. And the thing about employee theft is that it's everywhere. Okay, 95% of all businesses suffer from employee theft. Employee theft costs about $50 billion annually. That's why people spend so much money to stop employee theft. 60% of all employee theft comes from organizations with 500 or fewer employees. Now, I imagine most of you here work for companies or own companies with less than 500 people. And, 95% of men commit employee theft. And that statistic, I think 95% of men, people who get caught with employee theft are men. Obviously, women do steal too. And remember, this includes all kinds of theft, from stealing pens to stealing millions of dollars. And in the case of Dan, it's millions of dollars. Now, the way you analyze employee theft and why it happens is basically three things. And it's called a fraud triangle, and it breaks them down into three separate categories. The reason people steal is, first, they have an opportunity. Second, they have pressure to steal. They can't afford their lifestyle. Maybe someone's sick in the family. There's all kinds of reasons why people steal. And they rationalize it. They don't like the owner. I'm underpaid. I should make more than my brother-in-law, that type of stuff. And and this is something I questioned Dan about to see if, I kind of thought that I would find it out because I testified in court and I brought up the fraud triangle and I applied it to him. And it was good to just get verification. A lot of things I thought happened did happen. Now, simple ways to limit exposure to employee theft. It's really not, it's almost impossible to completely stop employee theft, but you can limit your exposure. It's simple things that small companies can do. And, the first thing is to verify past employment. Now, they never verified Dan's past employment when they hired him. They just hired him. If they did, they would have found out that he stole money before. Never was in prison, but, they caught him stealing money, not a lot of money. Set up a system of checks and balances. And I realized the big reason people steal in small businesses is because you can't afford to have 3 or 4 people in the accounting, department of a small company, right? They're struggling just to make payroll. And usually they have one employee, a good bookkeeper or controller, and they're doing everything. And there's no segregation of duties. The person writing the checks is the same person reconciling the bank account, although that's no-nos. But you still, even if you're, you still as an employer, you still go out there and say, listen, let's take a look at the payroll together. Make sure you understand everybody on the payroll. Go through the bank account. Years ago, you used to get the bank statement mailed to you. You go through the checks, make sure it was your signature, make sure you understood who the check was written to. Now you do it online. Say, hey, listen, bookkeeper, I'm going to go check the checks. And if there's any questions, ask them. This doesn't look like my signature. I don't know who this vendor is. They'll realize that you're checking, and there's nothing wrong with that. It's your business. Conduct random audits. Same thing. Do what I'm telling you. Spend maybe 10 minutes a week asking some questions. Hey, let me see the American Express bill. Set up a suggestion box. This is huge. If you have a suggestion box, people will put all kinds of stuff in there. Some of it's going to help your company run more efficiently, but they may put in, hey, I think that, Frank's stealing inventory out the back door, or Frank's backing up to the dock after we close and he's stealing stuff. Or, the bookkeeper, just bought $1 million house. She's making, $70,000 a year. A confidential phone number. Bigger companies have these tip lines all the time. This is a great way to stop employee theft. It's very easy because other employees know what's going on. Now, there's going to be a lot of false alarms because people don't like each other. But it kind of, like if they know there's a suggestion box there and the accounts receivable clerk doesn't like the controller and he's doing something funny, she may say, hey, I think he's stealing money. you know. So it really does work, and it's very inexpensive to do this. So let's talk about this interview. I spent probably 2 hours on the phone with Dan, 2.5 hours. And the first thing, is background. Okay, first of all, Dan was very competent, in his late 40s, married with 3 children. His wife had a great job, plenty of money between them. Like I said, he was very competent, and he really had a niche, which was the movie theater niche. And what he did, he was like a controller for a bunch of movie theaters in New York City. And, he would, pay the bills, make sure he had 3 people working for him, pay the bills, check the bank recs, make sure everything was in order. There was a big company making a lot of money. And there was a lot of investors in these theaters. So he had to prepare like these monthly balance sheets and income statements and mail them out. And he just did a great job. I mean, he made a lot of money, very competent, had 3 people working for him. In fact, he was so well known in this niche that he actually had other people. He would work part-time, on the weekends for other companies doing the same thing. And the funny thing was he didn't need the money. But he was like a workaholic, and he enjoyed working, I guess, or he liked the challenge. And he said he had some issues. I mean, he told me he was bipolar or something like that, some kind of psychological stuff. But very smart, very competent. Every business owner would love to have someone like that, because you could basically just rely on him to do everything, including steal your money. But So that was the background we're dealing with here. And, the opportunity obviously is he was overseeing everything. No one questioned him because he was so good at what he did. All the investors pretty much liked him. And like I said, other companies would hire him part-time. And, he would check the bills. He would check the bank recs. He would do everything, write the checks. He had an employee. They gave him a stamp so he could stamp that kind of stuff, stamp the checks. So he kind of was controlling the whole system. And everything was worked. No one was checking. No one would come in and really do random checks. No audits. There was no suggestion box. Maybe someone would have done something if there was some kind of controls, but there was none. And he ended up stealing from both companies, from his main employer and from the part-time companies. And what happened was, one day he said, I just wrote a check to myself for $400. I wanted to go out or something. And no one said anything. So 3 weeks later, he had another check for $400. Eventually, he set up another bank account for the company. He gave himself a raise. He rationalized that he deserved the money because he was working so hard, and he was also gambling. And so he set up all these ways to steal money. Gave himself an American Express card. And what he said was there was a couple of the investors that he really didn't get along with, and they really butted heads. And that kind of, got him upset. And like I said, he had some bipolar issues and stuff like that. So he rationalized, and he was gambling a lot. He told me he was considered a high roller at the casinos, and he would go down to the casinos and go into the high roller if he was playing blackjack. And there's something called gambler's, where you rationalize when you're a gambler. The gambler's fallacy, it's called. And how it works is, you bet, you win, you bet, you win, you bet, you win, you bet, you win. And he was in, like I said, the high rollers, so they would be betting, $10,000 or $5,000. And he'd say, listen, I'd get up to $160,000 and, have this great win streak. And all of a sudden I would bet it all and lose it. And this is how it works. They win, and then they lose. So eventually he needed the money to keep the gambling up. He didn't, his family had plenty of money, but he couldn't afford to lose, 30 or 40 or 50,000 or $100,000 a week. And that's what was happening. So he had this pressure, a lot of it was self-imposed, but, he wanted to go down to the casinos and be the high roller. He enjoyed, all kinds of comps and everybody running around. Oh, here's Mr. So-and-so and, here's Dan, and sometimes he'd win, but most of the time he lost. And then what he did was he would, write checks to these phony companies he set up. He had an increase in payroll. He'd use his American Express card. He was stealing money any way you could think of. He was stealing money. So the one thing was he would never have gotten caught. Okay, even though he's stealing millions of dollars from this company, this is a big company, and he controlled everything. So no one would really know. And at the end of the year, the accountants just took his numbers and did a tax return. No one would have ever caught him. But the way he got caught was crazy. There's something called workers' comp audits, and the state does them usually. And what they do is they go into companies and they look at all the checks they're writing. And anytime they see a check written to an employee, or into an individual, they mark it. And they found those 2 checks he wrote many years ago, and they questioned him. And guess who was running the audit? One of the investors who didn't like him. And he didn't understand why he wrote these checks out, even though he left the company at some point and went somewhere else. So he wasn't even there for like a year or two. And she called me. She said, listen, we want you to come in and just take a look. And I did. And right away, we kind of knew, once they described the situation, that there was a high probability. And, we went through, we documented all the theft, and we prepared reports. We went to trial. We testified. And he ended up getting convicted of grand larceny in first degree. And he spent 5 years in prison, like I said. So, it was really interesting talking to him. A lot of things behind the scenes I can't talk about here, but it was very interesting, very unique. Doesn't often happen where you can actually discuss, a case where you put someone in prison and they got out. So anyway, listen, hopefully you guys enjoyed this video. If you did, subscribe to my YouTube channel. It helps a lot. And if you have any questions, leave them below. We'll get back to you. Thanks a lot for listening.